Welcome back to the channel, guys. Another stock overview. Today we're going to go over Lululemon, Lulu. Currently having some issues right now. $228, $27 billion valuation. This thing is dropping. It's selling at the same valuation as it was pretty much back in 2020. So if we go back during that COVID crash, it dropped to the low of the crash was 188. So what do you guys think? It is at the same valuation as it was 5 years ago. What's going on with this company? Huge slowdown, huge drop in the price. It peaked at $511, down 55%. Let's go ahead and take a look at some stuff. First things first, let's check out FinViz. Lots of downgrades. A lot of firms and analysts are dropping it to hold. Nothing much in the insider realm. We do have Calvin McDonald, the CEO, buying back in September in 24. He was buying around $260. He bought 4,000 shares at $1 million price. Fintel, let's take a look at institutional holdings. Not much change on the institutional holdings. It looks like back in 2021, they peaked at around 510 institutional holders, currently sitting at 460 institutional holders. So this isn't a major red flag on this company yet. Currently at these prices, and in the long run, if they could turn things around, which I believe they will, this would be a good time to get in. But we'll see how far this thing could go. The markets are pretty crazy right now. The VIX shot it back up at 22 because of the Israel and Iran drama. So who knows how far this market will drop this thing. But so let's take a look at the website real quick. So just from my opinion alone, I feel like the main issue Lululemon, and this is just my opinion, not financial advice, but I feel like the main issue they are experiencing is they aren't really innovating anymore. I feel like everything they've been selling has been the same for the past 10 years. Nothing really new. I mean, they came out with a new shoe category, but I don't even know if this is picking up too much. And when you take a look at women's clothes, men's clothes, I feel like they've been selling the same thing for the past couple years, and they're pretty much just changing the color. So I feel like the company got a little boring. They used to have all this tech, but I feel like now they're kind of just changing the colors. They've had the same shirt, they've had the same shorts, pace breaker shorts. I swear they've had these shorts for like 5 years, 10 years. I feel like they've had the same type of clothes for such a long time, and then I feel like now their innovation is just changing the colors. Like, look at all these colorways. But when we go to the transcript, and we are currently on Q1 2025, the main issues they are currently having is the tariffs right now. So the tariffs are affecting their margins, and also the biggest market they have, which is North America, Canada, and the United States. The environment right now in North America, there's a lot of caution with the consumers lately. A lot of the consumers are holding back because of the bad and slow environment we're having right now. So no one has money to buy $100 leggings right now, or $80, $100 shirt. So people are holding back, which is affecting Lululemon, of course. So all right. Anyways, let's take a look at some of the fundamentals. $228, $27 billion valuation, the same price it was selling for back in 2020. So we have our data here. Total revenue, earnings per share, huge slowdown in the top line. You could see the slow decline. Earnings per share, the latest earnings per share, they posted $2.61 versus $2.55. That is only up 2% year over year. And go back to total revenue, they posted $2.3 billion that quarter, down 7% year over year. Margins slowly declining. We are 58% margins. Looks like they peaked at 60%, so 2 points down. And we go down to free cash flow. This is where we're going to start seeing a lot of trouble for Lululemon. They posted negative 2.25 versus negative 0.03. That is down 7,400%. Just want to double check that number because that is a huge drop. That is a huge red flag, actually. Yeah. March of 2025, they posted negative 2.25. That is down 7,400% year over year on their free cash flow per share. That is a bad sign. A company's stock price will usually track its free cash flow per share. So if we take a look at the share price, you go back to 2023, that's when they kind of peaked. Ever since then, it's been a slow decline. It might drop a little more just by looking at this free cash flow, but oh, and their cash flow from operations posting negative 119 versus positive 127 million. That is down 193% year over year. So really bad first quarter. Again, they are blaming it on tariffs and also the slowdown in consumer purchasing. The North American segment, a lot of people are cautious right now. All right. Net income, we have 314 million in net income versus 321. That is down 2%. So net income's pretty much been flat. So let's take a look at some of the positives and why I believe this company could potentially be a turnaround if they could just fix some things. So this is where we're going to see some positive news. Market expansion. So North America, as you can see, revenue for North America, which is America and Canada, has dropped to single digits, which was their main customer. But as of right now, remember, people are cautious. People don't want to be spending some money right now. The major markets they are currently expanding to is going to be China. China is their biggest market. I have some numbers right here. All right, so sales for China were up 22%. Again, Canada dropped down to single digits and United States dropped down to single digits. China is their biggest market and also the rest of the world. So Europe, Middle East, Africa, those are going to be the biggest markets. That's where they're still showing some double-digit growth. All right, let's go down to the balance sheet. Cash. Here we go. So take a look at their cash, guys. So February of 2025, they had almost $2 billion in cash. They're currently down to $1.3 billion. The CFO talks about how share repurchases remain our preferred method to return cash to shareholders, and we currently approximately have $1.1 billion remaining on our share repurchase program. And for the current quarter, they repurchased 1.36 million shares. So in quarter one, they spent $430 million to buy back their stock. That's why when they take a look at their cash holdings, it went from 1.9, almost 2 billion, down to 1.3. So that's the biggest way they are kind of propping up their stock. They spent $430 million to repurchase their shares, and they bought back 1.36 million shares in quarter one at an average price of 316, right about right here, 316. They are currently down almost 30% on that investment. That is not a good return to shareholders. And so right now they have about 1.3 billion in cash left, no long-term debt. Currently right now, this article right here, so the board of directors approved another $1 billion stock buyback program, bringing the total remaining to 1.7 billion, 4.2% of the current market cap. The total share repurchase program was 1.7 billion. They could spend that money on research and development, sales and marketing to sort of improve and innovate on their clothing line. So what do you guys think? That's the current rundown. I'll do a part 2 where we look at annual data. But for the short term right now, Lululemon is currently having some struggles. Year to date, down 38%. Wow. So in the long run, I think this company is going to be fine. They do have a lot of cash left with zero debt, so they do have a lot of leverage to execute and sort of figure out their plan on how to improve this business. But the major issue right now is improving their free cash flow. The stock might have a little bit more drop. If it breaks below 2, it might drop down to 170, 180, but we'll have to look for support. But again, guys, in the long run, this company is going to be fine. They have a lot of cash, no debt. I feel like it would be a bad idea for them to just keep spending that money on share repurchases when they could be using that for expansion or some innovation. Lulu's not going anywhere. They still have a great brand name. People are still addicted to this brand. This stock has hit my radar because we like seeing companies that are dropping a lot and seeing what's going on. Is this the bottom? Is this the bottom right here? $228, $27 billion valuation, the same price you could have bought it at during COVID times. What do you guys think? Is this the bottom for Lululemon? Again, thanks for watching my videos, not financial advice, and we will see you on the next one. Peace.